I'm Christy Duffy for Smart Trend News. Yahoo reported second quarter earnings results after the market closed on Tuesday. The company hosted a conference call thereafter at 5 p.m. Eastern. Yahoo reported second quarter EPS of 15 cents, beating out the street by a penny. It also reported second quarter revenue of $1.13 billion, beating, or actually less than the street's estimate of $1.16 billion. With me to discuss the results and what's next for the company is Clayton Moran from Benchmark Capital. Clayton, welcome. Thank you for joining us.
Sure, good to be here.
What were your estimates for the second quarter?
We were looking for 14 cents in EPS and $1.14 billion in net revenue. So they were slightly light of us on the revenue side and a little bit higher on EPS. Essentially, the more important number is the revenue. Revenues were light. They really didn't have any strength in the search business during the quarter, and display was solid, but not enough to drive significantly better numbers than expected.
Okay, by comparison, last week Google reported double-digit growth in its ad sales, but disappointed on higher costs. Yahoo disappointed on ad sales, while overall the 2010 ad market has been forecasted to improve for the year. So what does this all bode for Yahoo?
Yeah, Yahoo continues to underperform the overall online advertising market. We think that industry is growing about 12% this year. Yahoo's revenues were only up 2%. And as we've seen for many years now, Yahoo is dramatically underperforming Google, which grew revenues more like 24%. So Yahoo's losing share. It's really struggling in its search business, and really hasn't found a solution to its relative underperformance.
Yahoo's last ad campaign, which was launched in the third quarter of 2009, was a failure. The company launched another in May of this quarter, but unfortunately, users, according to Nielsen data, are spending less time on their website. According to Nielsen, surfers are spending, at the end of fourth quarter of 2009, it's down by 45 minutes since the fourth quarter of 2009, I should say, while competitors Google and Facebook are on the incline, and Microsoft is pretty much plateaued for the most part. So what are your thoughts? Do you think that this ad spending will see any positive results or help to increase traffic or win back share?
I think you're getting at the fundamental problem for Yahoo, and that is, attracting users and user engagement. Even Yahoo last night said the number of page views, that is web pages that users see during the quarter, was down 4% year over year. So their engagement is going down, and we think it's really driven by internet fragmentation. The specialized sites like Google for search, YouTube for video, and Facebook for social are gaining share, while the portals, which Yahoo is really the biggest one and most well-known one remaining, are losing share. So that does not bode well for Yahoo's advertising business. As users flock to these specialized, more targeted sites, the ad dollars will follow them there.
Okay, what about the acquisition of associated content? Do you think that'll help at all to help increase the amount of time and the amount of clicks on the site overall? The reason they acquired the company was because Yahoo was doing all right in terms of its content. However, they were lacking in the area of localized content and niche content. So they acquired associated content beginning in September in 2009. They started the talks and concluded this quarter on May 18th. So what are your thoughts on the acquisition? Do you think that it will help to increase clicks as it did during the test in the first quarter?
Yeah, I think at the margin that'll be a positive acquisition for Yahoo. As you referenced, brings more content to Yahoo's users, more targeted content as well. So that should really help Yahoo. But I think, again, it's at the margin. It was a $100 million deal. Yahoo's a $20 billion market cap company, so it's a relatively small acquisition. Good strategy, but I don't think it has that material an impact on the overall company.
Was anything mentioned on the call in relation to the Microsoft Yahoo deal, and do you think that was a good move for Yahoo?
Yeah, they did talk a lot about the Microsoft search partnership. They are integrating, the two search engines and sort of transitioning to the point where they will outsource their search engine to Microsoft. Basically, that will begin to show through to the user this fall, and they're hoping to have it completed before the critical holiday advertising period. We think that that deal was sort of mixed. They certainly didn't. Yahoo didn't get much value up front to give up that sort of search business, and there's really a lot of questions about whether that will improve the monetization of their search results. So I'd say that's to be determined whether there's anything positive to be derived from that. I'd also note that it seems to have taken their focus off the search business, and the search business was down 8% year over year, which was disappointing. So at least the initial results are not very good, and it's questionable whether that deal will really be favorable in the long term.
All right. Thank you so much. Clayton Moran from Benchmark Capital. We hope to speak with you again during the third quarter. I'm Christy Duffy for Smart Trend News. For more earnings news and market analysis, make sure you subscribe to our YouTube channel, Trade the Trend. Also, visit our website, tradethetrend.com, for more earnings headlines.